All right, hey there. Good morning, everybody. Christopher Franks with Texas West Capital. Just a few minutes after 11 a.m. Central Standard Time here on Friday, December 4th, 2020. San Antonio, Texas. Great to have y'all with me. Hey, do you celebrate Christmas? If so, you're running out of time. 3 weeks, guys. 21 days. I was thinking 3 weeks, 7 days in a week. Anyway, late night last night, put out some content for TWC. Already rocking it off this morning, doing well. So you'll have to forgive me if I lose my train of thought this morning. Who's here already? Sean's here. What's going on? Casper, great to see you, buddy. Arrowman, what's going on, man? Nevlusian, hey there. Devin's here as well. Spiral Architect, happy Friday, my friend. Telluride, good morning, sir. And as he says, good whatever time of day it is, wherever else the rest of y'all are. Man, see, I'm just stumbling all over my speech this morning. We're going to try and make it through this, guys. And I'm probably going to say something. I'm going to warn you right now, guys. If you are extremely bullish on anything right now other than the potential for the dollar, I think I'm probably going to say some things that are really going to ruffle your feathers. And you're not going to understand. Most of you aren't going to understand. I get that. But what you need to understand is I am speaking from a place of experience and a place of knowledge. And, the worst thing that you can do is ignore what I say and pretend it's not going to, that it can't possibly happen and then get caught. You don't have to believe me what I'm going to say today. But at least consider it and make sure that you are prepared if it does. Understand where your take profits, your invalidation levels, all these things are. Because we've got a heck of a thing setting up, it seems. Let me see here. Hey there, Brian. Onyx King is here as well. French Bull, what's up, buddy? Let me see here. Telluride says the AQB trade that we had paid for a bunch of months of subscription. Hey, man, I love that. Yeah, I saw you, and you had your stop loss a little bit too tight. Yeah, I saw that. So he kind of stopped you out, but, made those profits on it. So glad to hear that, man. One of more than a few that are really kind of pumping out some profits here, guys. So whether you're trading, Forex or cryptocurrency or metals or commodities of whatever kind, oil, natural gas, stocks, we do it all, guys. We do it all over there. Let's see here. Amber Lee, you used that technique that I taught you guys the other day. Got it right away. Awesome. That's our tier 3. Guys, if you're a part of tier 3, you get the weekly live streams where I give you all these tips and tricks and techniques to use to, even if you're brand new to the market, things that you can do without understanding anything about, anything else about the market and still make money. But they're not meant to be the only thing you do. They're meant to give you a way to get involved in the market as you're learning more about it, with our other educational material. But yeah, everybody seems to love that for tier 3. Something we started, gosh, I guess it's been almost 3 months now that we've been doing it. So, and we've got all that archive, guys. If you ever join, you'll have access to all the previous ones as well. Like I said, we've got well over 30 hours of educational content. On average, we've got over 50 setups a week, across all the different markets. Our intraday and daily analysis cover about 20 different assets. So, a huge bit of stuff there if you're in tier 3. Which, by the way, make sure you jump on this now, guys. We've got this, our Black Friday Cyber Week sale is going to end on Sunday. So if you want to get the absolute lowest price you will ever get from us, potentially, for the year, it's now. It's right now. If you get the yearly tier 3 package, you'll get it for less than half what the monthly cost is. So the monthly cost is $199. The average price of that yearly package with the Black Friday Cyber Week sale thing we've got going on is under $100 average price. So, it will not be that low any other time, any near that low at all, any other time for the rest of the year. So if you want to do it, guys, jump in there and do it. We'd love to have you with us, all right? Hey there, is that you, Off-Main? What's up, man? Good to see you. Data, what's up, buddy? Happy Friday, Mr. Matt. Let me see here. Mailbox Money, what's up, man? Checking in again from Quartzsite, Arizona, soon to be the RV capital of the world as snowbirds flock in. My dad probably knows all about that. He's all about RV. He's living the RV life as it is right now. I don't know how he does it. I couldn't stand to be that cramped up all the time, but, That's what he's doing. Anyway, guys, let's go ahead and jump on here and see where we're at. Let's see here. Here we go. Man, oh man, so much overlap and sideways with Bitcoin. What are we ever going to do? Well, again, it hit our target overnight, which was great. Those of you that don't know, whatever tier you're on, you get access. All three tiers get access to our Bitcoin market analysis and everything. And that comes in with a analysis first thing in the morning with charts and everything. A little bit later, I'll give you a morning update, video update. And then later in the evening, I'll give you an evening video update. And then if anything significant happens during the day, I'll give updates as well. So last night's video update, we were looking at the possibilities here. And I even pulled up the TPO chart right here. And I said, we've got this small initial balance range here. And we were down about this area right here. And I said, we're coming down from that. I said, most likely we're going to drop on down today. We're going to have like a trending day down, more likely than not. And that's pretty much what's going on here. On the chart, let me see, let me get to the 15-minute. We were looking at the 15-minute. And so I said we were likely to get down to this area right here toward the pivot. And we did. As you can see, we're right about that area. So, again, even with all the confusion and everything else going on, still able to knock in some profits here. But I'm going to tell you guys right now, the reality of this, guys, I need you to pay attention to this. The reality of the situation here is that this is what's going on, guys. The reality of the situation is we are just ranging from 18,100 to 19,918. So basically an $1,800 range here. That's really all that's going on. So anything you're trying to trade in here is going to be very risky compared to waiting for a breakout or a breakdown. And I know for most of y'all, you're like, oh, but then that means, look, I couldn't have traded for all these days since back here in December, so I haven't been able to trade for 3 days. Well, you know what, guys? The reality of trading is this. Not every day is a valid trading. It's not, you should not be trading absolutely every day. If you are, you are likely taking on more risk than you need to. And I say that not every day in the same asset is what I'm trying to say. Because sometimes a day, 2 days, a week, 2 weeks might go by and it's just not worth trading. It's really not. But again, I understand where you're coming from, but do you understand where you're coming from when you get frustrated with something like that? Because where you're coming from is this point of, well, I need to make money as fast as possible. And if I can't trade for a day or 3 days or a week or even 2 weeks, well, that means I'm not making money. Well, unfortunately, that kind of thinking is emotional, and it's going to force you to take trades that you shouldn't be taking. Remember, guys, the goal in trading is higher confidence trades. You want to find the trades that are most likely to work out. All right? If you're taking every other trade there just because there's a chance, you're going to get a significant number of losses. Your best hope in a situation like that is that you can at least break even. It's hard to be profitable when you're taking every possible trade, even with good risk management. You might become profitable, but be very, very small for a lot of work. You shouldn't be, when you're trading, guys, the idea is that it should give you time and money. It should give you freedom in those two areas. I see a lot of people online, a lot of people that try and trade and they spend a lot of time trading. And if they're profitable, it's very, very little profitable. It's the difference between going outside in 100-degree weather and digging ditches with a shovel for $10 an hour versus working in a climate-controlled building, and doing that, by the way, digging those ditches for, 12 hours a day versus working in a, environmentally controlled building where you're not hot, you're not cold, whatever, not doing a lot of physical work and making, $40 an hour for 5 to 8 hours a day. I mean, that's the difference. You don't want to be the first one here on when you're trading. You don't want to be doing all this work and getting if you're lucky, just a little bit. What's worse is most traders will get in and do all this work and do all this attempts at trading, and then they'll spend all this time, but yet they'll end up with a loss anyway. You should be looking for higher confidence trades, the ones that are more likely to play out. And what that means, if you do that correctly, is that you don't trade all day, every day, or, every day even. So just some thoughts on that, guys, there. Casper, you say, have to be honest, signed up for Tier 3, and it's slightly overwhelming. I usually do give that warning. Yeah, it is. It says so many great things and knowledge, not to mention great community members. Yeah, our community members are definitely amazing. Almost difficult to decide where to start. Word of advice, start from the beginning, because you are bound to find that you know less than you think or have been relying on luck quite a bit. Yeah. So, guys, hey, listen real quick while I bring that up. What I usually tell people when they first come in, they don't believe us about the amount of content that we put out every day. And what's all available to you in Tier 3. It is stupid the amount of content we have, guys. And so most people do come in and are a bit overwhelmed at first. We've done our best to really put it in a structure that's easily accessible. The best thing to do is to go in there and watch the educational video series. And, of course, start watching some of the videos from the previous weekly Tier 3 streams. Because those can give you, the other one gives you the better idea about the market and how it works and how to use things properly, how to do things properly, with technical analysis. Whereas the Tier 3 stuff gives you specific techniques you can use. It tells you, here's where you enter, here's where you exit, here's where your stop loss is. And you don't have to know anything about anything to use it. You can still use it. That's where I'd start. The other thing is spend a lot of time in the Bitcoin channel. Bitcoin channel it is our most popular channel, obviously. So much discourse goes on in there that you're going to learn a lot. It's going to sound like Greek to you at first because there's so many great knowledgeable traders in there. But they're always very willing to help you out and talk to you and whatnot. And, of course, if you believe you're a new trader, guys, get a hold of Adam when you join, and he'll talk to you about it. And if he believes that you are, then he'll give you access to a special channel for new traders only, where you can get in there and you can ask any questions that you want and not feel like you're being judged. Because Adam does all the screening in there, make sure that the people in there are all new traders. So, we just try and do everything we can to help you guys out. But that's where I'd start with Tier 3. Other than that, pay attention to the chart request channel or the requested charts channel, where I'll post all those charts. Potential opportunities to trade there, as well as the hot takes channel, which are updated 3 times a week with usually anywhere from 15 to 20 setups across, crypto, stocks, and Forex, where you can find a lot of potential trading opportunities there as well, like the AQB one we had, or NAKD we had, which did really well, or I can't even remember all of them, guys. So many of them that I've mentioned. So, I mean, that's the way I'd start out with that for sure. Yeah. Tell your writer says you can't even keep up with the one channel Bitcoin. It's good times, right? Oh man, sorry guys for the other idiot over here trying to spam us. We'll go ahead and block them. Let's see here. Hey there, Block Tag. Good to see you. Let me see here. I kind of catch up with you guys here. LG, what's going on, man? Christian Herman, what's up? He says 4 hour has a bull div with one. I can't tell what you're saying there. I'm sorry. My eyes are so bad, guys. I'm sorry. I will try. Let's see here. Let's see if it confirms. I'm watching for a quick break of 20K followed by a bear div in the 4 hour and then a major correction next to the holidays. Usually people take some profits before going on holidays, so would be a nice fit for the scenario. As always, risk management comes first, so only going with 50x on these moves. Take care and keep with this mood. Always nice to be here. Hey, Christian, man, I love it, man. I love it. Yeah, so, again, guys, some things going on here. So let's go ahead and talk about exactly what we're looking at here. So right here, we've entertained many ideas as this has played out here. Right now, I've got it down to 3 potential scenarios, I think, where we're at here. And so I've got them in 3 different colors, okay? So I got in purple, blue, and red, okay? So red suggests that we've got a 1 down and a 2 up that gives us a minimum wave 3 target down here at 16,687. Here on Bitstamp, okay? That's the first one. But we have a blue count here, which suggests maybe we have an A, a B, a C, and then we have a D and an E for a triangle. If that's correct, then we should have a target of around 20,500 when that's all said and done. The third possibility is this purple one. And this is just a simple A, B, and C. And C is likely to target down here around 61.8 at 17,630. Now this purple one is the idea that maybe we've got a 1, 2, 3, 4, 5 here. So this is just a 1. That would be a 2. And then we'd have a 3, 4, 5 still to go. All right. So what do we do with all this information? Well, what we do with all, and by the way, this triangle here suggests this is a 1, 2, 3, this is a 4, and then we have a 5, which would be a final move before a larger pullback. And of course, this red one says this is the 5 here. And so maybe with this right here, we got a 3, we've got a 4, and then we've got a 1, 2, 3, 4, and then we've got this leading diagonal or ending diagonal here for 5, slightly higher high here, okay? So how do we use all this? Well, the way we use all this is we start with the triangle. And we're assuming right now that wave C is done here. If this is wave C, and this continues up from here, it cannot go above this wave B swing high here. So this 19,621. If we move up from here above that, that invalidates the triangle. Okay? And in that case, we'll probably look at this maybe as a I'm just not even sure about this, but I guess this would have to be a 1 up here. And then this would be a 2, and then you'd be 3, 4, 5. That I think is the least likely of all the scenarios at the moment. So if this is a triangle and this is C here, we'll expect D to go up, and D just has to terminate prior to that 19,621 swing high. And then you'll have an E on the pullback, and E has to stop prior to this wave C's termination point here. So E cannot drop below 18,671 and 61 cents. If it does, that would invalidate the triangle, and then you'd be looking at the purple count. So again, you come on through that, you go to the purple count. Now, wave C of the purple count does not have to end at 61.8. Remember, it would be a wave 2. And so as a wave 2, we could see it, I always look at the 61.8 to the 70.5 as the sweet spot for a wave 2. So I would give it that room. But if price continued down below that 70.5, closer to this 60, this 1.618 extension down here, I would start to move away from the idea of the purple count and looking at the red count. And that's how you do it, guys. Again, as I've said before, I think the big thing about Elliott Wave is that it gives you clear invalidation levels. And you go, oh, but what if my count is wrong? Well, that's the beauty of it. It lets you know you're wrong. If price goes through the invalidation level of the count you're looking at, then you know your count is wrong. Right there, there's no guessing about it. Get out. A lot of times traders, they say, well, I don't know where to put stop losses. I think that's one of the real big benefits of Elliott Wave is it lets you know where to put them. But Elliott Wave, like anything else, it takes time to really learn and to master. I don't know that you ever master it, but to become really good at it consistently. But if you stop looking at Elliott Wave as just this simple projection tool and start looking at it more as a way to figure out if you're in the right direction of a trade, you're going to be a lot better. But that means you have to take your thinking from this idea that you have to, buy the absolute lowest price and sell the absolute highest price, and just get into the thought process that is, hey, I need to lock in profits consistently. Remember, the goal, the secret to remaining a trader, to being successful over time, is locking in profits consistently. Period. That's it. If you can do that and then minimize those losses, good risk management, there's no way you're not going to be getting to where you want to get at some point. But the problem with it is, as most new traders see it, is that it takes too long for them. They want to be rich yesterday. But you're not going to find anything in life that's going to make you rich yesterday. So stop trying to think that the market's this thing that's going to do that. It's not. Because it'll just end up causing you to lose money. And you don't want to do that. Let me see here. Hey there, Baker. Good to see you, buddy. Happy Friday. Happy Friday. Let's see here. So, yeah, so that's what, we're kind of looking at right here. Realistically, guys, if you want the thing that is the least risky, wait for a breakout above the swing high or a breakdown below the swing low. That is the absolute most basic way to trade. And it's a lot more conducive to profits than otherwise. Remember, as traders, you generally tend to lose a lot of money with all this up and down sideways movement. All this noise, what we call noise. There's no trending direction in this. So it's easy to get stopped out and lose money on something like that. But it's your breakouts of ranges. For instance, here's a range down here. You have, let me see here. You have this swing low down here, this swing high up here. So you've got this range. I don't know why I always turn this into some kind of educational thing. I hope you guys don't mind. So basically you've got this range here. Don't worry about all this. Buy the breakout or the breakdown. If you just ignored all this and you didn't trade from the 26th of November there till the 20th November. So if you skipped 2 days in here, just didn't trade, and just bought the breakout on the long, guess what? You made good money there. If you tried to trade in all this, you probably lost money. Same idea here, guys. But you have to change the way you think as a trader. I keep telling you guys, the number one problem, the number one biggest challenge, I guess I should say, that you're going to face as a trader is yourself. It really is. Your impatience, your emotions, your lack of discipline. Those are the things that are going to cost you more money than anything else. It's not what you're doing right here. It's what's going on up here. But notice, those are the things that most people don't talk about a whole lot. Something we talk about all the time. Something I constantly remind our members about. And sometimes they get frustrated with it because they're still in the emotional, they're still dealing with all that themselves. It's this idea, why, Chris, why can't you just be bullish right now? Like everybody else. For some people, it really hurts them to their core that I am not super go bullish. But we're going to talk about that today. The thing is, guys, I've been doing this a long time. And a lot of things, just in general, in the whole macroscape here, don't look good. And when I look at the arguments for Bitcoin, especially ones popping up right now, these sky-high targets right now, all these things, it doesn't seem very healthy as far as the market goes. But again, we'll talk about that in a minute. And it'll probably ruffle some of your feathers. It will. I know it probably will. But I hope that you guys are adult enough, mature enough to kind of stick around and think through what I'm saying. Again, I'm not here to convince you that I'm correct, but I'm here to lay out my reasoning. Because I constantly get barraged with, get hit with all these messages from people that really are like offended to their core that I am not, Bitcoin's going to 30,000 tomorrow kind of idea. That I keep preaching caution. And I keep looking at other possibilities as well. So it is what it is there. Telluride says risk management and back to basics. That's right. He said, I was rich yesterday, then I wasn't anymore. It's what led you to TWC eventually. Well, we're glad to have you here, of course, man. Excuse me. Let me see here. So this is kind of where we're at the moment, okay, guys? So if you've been confused and frustrated here the last 3 days, you're going to be. Because it's just a bunch of overlapping price action. Small candles overlapping tends to be corrective. All right? Until it's not anymore. And it's not anymore when it finally breaks out of the range. So this is the 1 hour chart here. Can we see anything from the other time frames? 4 hours dipping down here. There is a bit of possible bullish divergence here. I think this is what was being spoken about earlier, as you can see right here. But, all you need is for price to continue to drop on down, and it could easily, not complete. It hasn't been validated yet. And with Stochh RSI having room to drop there, I'd be very cautious about it, because there's still a lot of room here for Stochh RSI to drop on that. If price drops below, see, it's not even that swing low, it's this one. See, it's this black candle over here. It's not even the white candle that's the swing low, it's the black candle. So if price drops below 18,462 and 85 cents here on Bitstamp, that would invalidate the possible bullish divergence there. It's worth watching to see if it happens. But I'm also cautious because the swing low on that is not the swing low on the candle. It's prior to the swing low, the candle swing low. And so when it comes to divergences, that always gives me pause. That always keeps me cautious. The best divergences are going to be the ones where your swing lows or highs on your RSI coincide with the swing lows or highs on your candles. So that's where we are kind of with that at the moment here. As we continue to move on out here, daily, of course. See, now daily's, with the move up here with daily, now it's got a lot of room to drop again as well. Don't forget, daily is still working this bearish divergence as well here. And so this is what we have. Let me see here. I've got this other, still have this kind of this parabola here from back on this May 9th swing low here. And then again right here on the October 8th swing low and coming up there. For me, I'm most interested, I know I got all this stuff showing up in that lower time frame. Let me see if I can do this here real quick. Come here. Yeah. TradingView's done a few things recently. It makes it not as quick and easy to grab these things and change them as it used to be. Let me get rid of some of this stuff right here on this so I can talk about this larger time frame with y'all. Without all this other kind of stuff just kind of being in the way there. Give me just 1 minute. Sorry about that, guys. Man, TradingView should know where I want these to be and only show up at. All right. So to me, again, I mentioned this previously, but to me, I think the bigger thing is this range right here. I think this is what we're doing. So it seems to me that we would more likely than not have a pullback toward the bottom of the range here, at least. As we kind of look at it here. But we've got to see what it happens. I mean, ultimately, if we're just trading pivots, we moved in between the pivot and the R1. So we're waiting to either get a bounce off the pivot, and then, we'd have a target of the R1, or a rejection from the R1, which gives us a target of the pivot. Or if we drop through the pivot, most likely we're going to the S1. You want to watch your swing low here, maybe an intermittent bounce at 16.2 or so. But you're ultimately looking at the S1, potentially the S2. So, I mean, big picture, everything else in the way, that's kind of how you would look at that right there. Let me see here. Yes, hidden bull div. Sorry about that. Off main, yes. On the 4 hour, hidden bullish divergence there. Lower lows on the RSI, higher lows on price there right now as it works through that. Let's kind of bring this over here. So just kind of a 15-minute look at what's going on here. Where is this from? I don't know. Some other time frame. We'll just get it off there. Maybe the 1 hour. Let's see here. Brendan says, people like the herd mentality. If everyone is bullish, then it confirms their bias. It's why guys like Pomp have so many followers. I'd be lying if I said that was never me. Yeah, we're all gonna face that at times. Sure. And it's not always easy, having a potentially contrarian view. Because especially if you put stuff out there publicly, you get a lot of flack from it. And no matter what you say to someone that doesn't have a lot of experience or a lot of understanding of markets, you can't ever convince them. And, many of the arguments they use make no sense, but they don't realize that. And it's like, so what do you do then, So it's difficult if you're not with the herd. It's the same way, with any other thing in life. If you have a viewpoint that's different from, the bulk of everybody else, well, then, society's response to that is to shun you, to try and force you to conform. But I'll tell you what, we've never advanced by conforming, guys. It's always been those guys who stick out. Now, I'm not saying to be contrarian just to be contrarian. No, not at all. I do have, occasionally I have people who say they're traders telling me, oh, yeah, I'm contrarian. Well, when are you contrarian? Oh, all the time. If everybody's just that way, nope, I'm the other way. No matter what. Well, that's not what you should be doing. That's just silly. But, again, if you're contrarian with good reasons, maybe time proves you right. But the important thing is, whether you're contrarian or not, the important thing is to understand what you're doing and where it could go wrong. And I think that's the biggest thing that most new traders miss. And I say new traders, but even traders that have been in for a while that continue to put more money into their accounts. They miss that, I think. Let me see here. Matt says, what do you think about an idea that we are in a running flat? I'm not very good at EW, but I saw someone had that idea, maybe a running flat. Are you talking about the large time frame? Yeah, a running flat. Wait, a running flat? Oh, well, if it's a running flat, you're going to have to tell me what time frame you're talking about. A running flat would be basically, let me see here. So you'd have your move up into, see here. So you have your move up and you get a high, right? And so that's the end of your high there. And then you get your A, and then you get your B, which has to go higher than where A started. And then you get your C, which closes prior to where A ends. There goes that. So this would be a running flat. But anytime you have this possibility, you also have, you also have this possibility. Goes back over here. Instead of a running flat, expanded flat. And the expanded flat happens much more often than the running flat. The running flat, the running triangle, these are rare patterns. They don't happen very often at all. So your default thought, if you even think you might have a running flat, is that you're going to have an expanded flat. And if it reverts, usually around the 61.8, but at least just somewhere prior to where wave A ends, if it reverses before that, then you can look at possible running flat. But your default should be expanded flat until proven otherwise. Because again, the running flat along with the running triangle are very rare patterns. They don't show up all that often. This one right here shows up a lot more often. So you always want to default. Remember, guys, part of trading is following what's generally expected. You're not going to be right all the time. Generally expected doesn't mean it happens all the time. It just means more times than not, in this situation, this is what happens. And so if you trade according to that, you're going to be more right than wrong, as long as your analysis obviously is right. So always keep that in mind. Tell you right, I say lots of trading view glitches over the past few days. Yeah, I've noticed a few myself. Yeah. Hopefully they're getting everything figured out. Let me see here. Matt, you're very welcome. Yeah, so, real quick, guys, bringing you out here to the larger picture. Some people have asked me, is this idea of a, let me get my other chart here. Is your idea that we may go down to, 3,000 or 1,000, wherever, is it still there? And most people say that because they want to say, it's not there. Actually, it is. So this is what it is here, guys, all right? This is what I was just talking to you about, the expanded flat, right? Or potential running flat. So what you have here, this is the weekly time frame. Instead of having 1, 2, 3, 4 as a triangle and 5 down for A, what you have is 1, 2, 3, 4, 5 gives you A, and then you have a triangle as B, and then you have 5 more down here for C. And if you have an ABC to begin with as an A, then you necessarily are going to have an ABC for a B, and then 5 more down as a C. Now, again, the expanded flat says ABC down, ABC up above where wave A started. So it could be there, it could be higher up. It could be up 24,000, 25,000. But in the bigger picture here, if you're getting 5 waves up here in this one right here to get you up there, then you look for that reversal coming down in 5 waves, and if it's expanded flat, it takes you below where wave A ended. Now, if it's that much less frequent, much more rare running flat, well, then you're potentially just looking for a pullback to around 61.8, which from our current high gets you down here around 9,500. You can get 5 waves down there and then head off. But again, it doesn't have to end at the 61.8. We just usually use it as where we look. It just has to, if it's a running flat, it just has to end prior to wave A here, where wave A ends. So yeah, it's still, as long, it's still very much a possibility here, guys, depending on how you want to read that. Now, again, I think we're pretty much all in agreement. This is a 1, 2, 3, 4, 5, and this is an ABC. So again, we would be looking for 5 up here to finish it out. Now, as I told you, if this is bullish, then this is most likely a 1, 2. If we get a reversal from this area here, it'll be a 1, 2, 1, 2. Is what it'll be. But again, it could continue up from where it's at here right now. We're just not seeing it yet. We're seeing a lot of pullback. And I know a lot of you are surprised by this, right? You expected to hit the all-time high and just kind of take off into price discovery, right? But I warned about that. I warned about that often, that was probably not going to happen. More likely than not, we'd have some kind of large pullback first, or at least some kind of hovering around the all-time high before it really kind of takes off. And that's kind of where we're at right now. So now we need to see, okay, what happens now? So, even with the idea of a possible expanded flat, I'm not telling you that's definitely going to happen, but I'm telling you need to be aware that it could. Why? Because otherwise, you're buying the dips up here and you're holding all the way down here. And heaven forbid, if you bought up here and held down here and rode it all the way back up here, and then you did it again, I mean, seriously, guys, how are you going to feel about that? It'd be awful, wouldn't it? So the idea is just kind of keep you aware of what's possible out there, what could potentially happen. And it's not even like it's just remotely possible. It's a good possibility. Again, depending on what happens here. We're looking for some more significant pullback to really kind of set up the idea of, okay, is this really happening? Until we get some significant pullback, it's just a possibility. Let me see here. Let's see here. Can it be a correction like May, June, July, like a wave 4 of a bigger wave 5? Let me see here. I think that's this right here, right? Are you asking if it could be that? Sure. There's always that possibility, of course. Yeah. If we look at here and you go, okay, I think, okay, so this would be 4. She'd have to look at something like a 1, 2, 3, 4, 5. Or 5 up here. Let me see. 1, 2, 3, 4. So that'd be a 5. And that'd be a 2. And then maybe go 1, 2. See, here's my thing. If I look at this, one of the things we often do with Elliott Wave is when you're in a time frame, you kind of look for the opposite colored candles. And those kind of let you know usually where your waves are. So I can see a 1, 2 here, 3, 4 here, and 5. And I can see it done because it's a higher high off that. And it's 5 waves up off this 16.1 here, this 16,000 level. That's 5 waves up, and it's above that high. So, I mean, realistically, it could be a 1, 2, 3, 4, 5 when you're looking at it on the weekly here. Could this whole thing here, though, turn out like this? Yeah, sure. It could. You'd have something, and I don't do this to say this is what price action is going to do, but just to kind of give you an idea there, maybe. Something like this over here. Might or might not be that same kind of area, but just basically that idea of that movement there, basically between 18.1 and 20,000 there, or whatever it is. Just about 20,000, I guess. So, yeah, it's a possibility. So I've got this, speaking of that, I've actually got this channel here. And I've got this channel because it's interesting that, let me kind of get rid of this again. That what we're looking at, let me zoom into the daily for that. If you go from this swing high to this, I moved it all, doggone it. Oh, give me just 1 minute here. Yeah, so basically like something like this here. And so what you end up having here is you have this resistance here that seems to be pretty in line with what's kind of going on with everything here. So you have these hits right here, these couple of hits, 3 hits on this line. And then you come up here and you have these almost two hits here. You got the first one there. I always get a little bit higher there. But you got the first hit here and pullback, and then a rejection just below it again. And so for me, this is a very intriguing resistance line here. If we get rejected from this well, I think you're looking at least at the EQ of this channel. So potentially here around 17,000 to 17.5. And potentially the lower end of the channel here, which gets you down, in your 14,000s most likely by the time it gets there. And of course, if you get a breakdown of that channel, looking at that, you get a pattern target then of probably around $6,600 below the point of breakdown. So that's taking you your mid sevens maybe. So again, just bigger picture ways of looking at this rather than concentrating on just all that 15-minute time frame all the time. Some bigger areas to kind of watch. But that runs a line. That runs in line here with falling through the daily pivot. I mean, we're coming between the pivot and the R1. If we drop through that daily pivot, we should at least be looking at the S1, probably the S2. And if we continue through that S2, well, that S3 must hold, because once you're getting to that S3, then it usually means at least S4, potentially S5. Now, these are all, these will only be good through the end of the month. So, however far that took to get down there. But, again, it's the idea of how price tends to move in relation to its movement from where it is. And so these pivots just kind of give you general areas of support and resistance along the way that give you those heads up. Let's see here. Indian indices broke all-time highs after the 2018 fall, same as Bitcoin. Looks like every market is going up. Yeah, it does. It does. And that's part of the problem. That's part of the problem. There is basically, at this point, what you're getting across the markets, especially when it comes to, for instance, the dollar, is that you have this bearish attitude toward the dollar because everybody thinks that it's time to be excessive. Again, the one thing that we see coming up more and more often right now is this idea that, hey, maybe the 2020 is like the 1920, is like the 1920s. If y'all know anything about U.S. Financial history, you had the Roaring 20s, which led to the market top in 29, Great Depression for the next, few decades, right? But, things are not the same right now that they were then in terms of speculation and whatnot. Things are a lot higher now. I'm not talking about dollars, but I'm talking about percentage of certain indicators. Back in 1929, they were very low, Or back in 1920, they were very low, which gave them room for the roaring 20s, right? But today, they're very high. When it comes to markets, guys, I often talk about, if everybody, for instance, for the dollar, if everybody's bearish on the dollar, who's left to be bearish? And it's the thing we often look at. If everybody's excited about something, everybody's long something, who's left to long it? And this is, it's an easy, real generalization to make, but it has a lot of heft with it when it comes to markets, because it's when people get too off sides, when the market is too long or too short, that the reversals generally happen. The ones that come out, and then they're like, oh, black swan event. Oh, how we couldn't see that coming. Why couldn't you see it coming? Everybody and their grandmother was taking money out of their piggy banks and putting it in. Of course it was going to go the other way. Now, that doesn't mean it happens tomorrow or anything, but it means if you're seeing that coming into a market, it's fine, ride with it, but just be aware of what's going on and understand where you need to be out so that you don't continue to remain emotionally tied to that market as it moves. Let me see here. Hey there, just in time. Good to see you. Says, do I see a potential cup and handle on the 4 hour between the 15th and now, or is the handle getting too big? This right here, that would never be a cup and handle. And I don't mean that towards you. I say it because I've seen that a lot on. Let me make sure I've got the time you're talking about right here. November 25th and now. Yeah. No. That's not going to be. Because I see a lot of people talking about this on crypto Twitter. That's why I said it like that. Hopefully I didn't offend you there. I didn't mean to. I wasn't talking about you particularly. But there are some hallmarks, okay? So when you have a cup and handle, what you want to see, what you want to see is something like this. A gradual move down, gradual move up. The more it looks like this, the less likely it is. The other thing you look for is your volume. If you think you have a cup and handle going on there, then in the cup, what is the volume doing as the cup builds? Because what should be happening is you should see a decrease in volume as you get down here and an increase in volume as you go up. Notice we have the exact opposite. We have an increase of volume down to the bottom and a decrease in volume as it goes up. So we've got the first two things are against it. It's V-shaped instead of U-shaped, and the volume expands on the way down and contracts on the way up when it should be contracting as it gets closer to the bottom and expanding as it gets up toward the top. So yeah, with those two things right there, I would say it's most likely not. I would not. I know I said it's not earlier. I can't guarantee anything, but looking at that, I would definitely say it most likely would not be a cup and handle. There's too many guidelines, rules, whatever that you should be following that it just doesn't tick. It's completely the opposite. I've got this up here as a potential double top, maybe Adam, Eve kind of thing going on. I don't know. This was from a few days back. I still got it on there just in case. If we continue to get some good movement down below this swing low over here, then it gives us a target based on the height of it of about 12,488 or so, based on the height of that pattern. So potentially something else you can watch there. But again, that would take it probably here below this ascending channel, which then opens up that channel target, pattern target down toward around 75, 7,800, whatever, when it finally comes through where it'll be. Let me see here. Crypto Malgly, what's up, man? It says bit late, fashionably late? Probably not. Good morning, good evening, hello. Hey, good to see you. Justin, I'm great. I'm glad to hear that, man. Again, yeah. Sometimes I might come off a little bit harsher than what I intend to. But it's when somebody asks a question that I want to talk about. And there I went. I just lost my train of thought. Told you guys it was going to happen. Wow. That's the weirdest thing, guys. Don't get old. Now, it's good to get old, but it's things like this happen. So unless somebody tells me what I was just saying, I'm going to just kind of move on because I have no clue. Sorry about that. But anyway, so, potentially double top. I'm not really holding on to that a whole lot or anything. I'm just looking as a possibility as it plays out here. But again, that takes a lot more coming down from where it's at to even really kind of start considering it. So, yeah. Let's see here. But anyway, so that's kind of where we are with here. Now, what happened today? Well, today the non-farm payrolls came out, guys. So that's basically the jobs report, the unemployment report here in the U.S. Now they had a big expectation of 400,000+ jobs is what they expect to see an increase. The increase was only 245,000. Basically, it was just about half of what they were expected. Yeah. I was talking about all of you becoming millionaires overnight. Right. But yeah, so while there was an increase in jobs, it was significantly less than what was expected. And where they found the greatest cluster of those jobs that were increasing were in the less than high school education level jobs. So really the low paying menial jobs is basically what it's kind of saying. And I don't mean that as disrespectful to anybody that has that type of job. I just mean when you're comparing it to the other jobs. Because the problem with that is that doesn't pay a whole lot of money. The people who are doing those jobs don't make a whole lot of money. So if you're hoping for this, for some kind of job uptick to get the economy going, it's not going to be done that way. As a matter of fact, what we were seeing most recently is what what I talked about earlier in the year, which I said, by the time we're getting out of maybe Q3, Q4, we're going to start seeing a lot of the white collar jobs start going away. These are the jobs that are important to watch because these are the people with excessive incomes. These are the people that have a lot more income. These are the ones that are going to take out larger loans and credit and whatnot and spend because they have the money to do it. Unlike the lower end of the job spectrum, which is, man, they're just trying to work just to survive, just to get by day to day. And so that's what we're kind of seeing. We're seeing a decrease in those high-paying jobs and an increase in the very lowest-paying jobs. But even that, like I said, was just a small increase over what was expected. Now, normally, that might be bad for the dollar. I don't think it is this time. I kind of, mentioned some stuff this morning with over in Discord. But, at this point, here's the thing. Barring some really weird, crazy thing where Trump ends up remaining president, Biden's the guy coming in, right? And we already know Biden's talking about all these huge spending that he wants to do, right? And so that's got everybody thinking inflation. But it's not there yet, right? Because it hasn't happened. He's just talking about all this. Well, my thought is with a Republican-led Congress, they're not going to get a lot done. He can want to push all this huge spending bills all he wants, but at the end of the day, McConnell and the Republicans are just going to block it. And it could potentially become just a bunch of nothing for the next 2 years until you're getting rotation there in Congress potentially. So, okay, there's that. So we saw the dollar, decline recently here. Let me see here today. Okay. I don't think that's really going to be it. I think it's close to the other one, if this one. So with the dollar, we see this decline here. And it's coming at the time when, when this stimulus package is going through Congress. So if you want to create a narrative, you say, okay, well, dollar's going down because people believe that because there's this big, huge stimulus package coming through. And they think that if it gets passed, it's going to be inflationary, right? Well, the problem is it's pretty big. And at this point now with this drop, I think that's all kind of, in the market. It's all priced in now. So to push further down significantly, I think you would need a much larger stimulus package to come through. Because again, what's there already, what they're talking about is what's priced in, which is around $1 trillion, 900 million, something like that. Or 900 billion, trillion, somewhere right around there. But again, I'm not even sure that gets passed. With Mitch McConnell and them, he isn't saying much. He isn't even he's just being kind of quiet. So if we don't get that, well, that means those who were bearish on the dollar because they thought that was going to happen are going to change their tune. Dollar's going to pop up, okay? The other thing we got going for us is this whole pandemic thing, right? And so now there's this vaccine out there. And so the idea being that if the vaccine works and it gets around into everybody's, here in the U.S., everybody's gets vaccinated, or a large number of people, it increases optimism for the potential for the economy to get better. Because, then we don't have to worry about the pandemic so much. So the government will stop telling, people that, businesses that they have to close down, and people will go to work, and people will make money, and they'll spend money, and, this whole thing, right? And so if that's happening, that's going to be bullish for the dollar. If you look at that, if you have to choose between bearish and bullish in that situation, it would be bullish for the dollar. Because if people are going back in and spending money, whatever, then there's less reason for the government to increase spending. And again, it comes back to if people don't believe that the government's going to increase spending, then they don't think inflation's going to come. And so, they get bullish on the dollar again. And then above all of that, you've got the Fed committee, which I don't think they have a reason to do anything right now. Sure, the jobs number was less than what it was projected to be, what is expected to be, but overall it was still an increase. Unemployment's dropped from 6.9 to 6.7. So there's no reason there for them to do anything. Now that we've got the vaccine thing going on, again, what I just said there, that's in their mind as well. So there isn't any reason for them to go overboard and do anything, that people would deem extra inflationary at this time. So I don't think there's a whole lot of reason to push the dollar down. Now, it doesn't mean it can't go down and continue down further from where it's at here. Maybe even to Hank's mid or upper 80s level. Doesn't look like he's here today, and yet here I am talking about it. He missed out, didn't he? But anyway, so, I think in the grand scheme of things, I think we're probably much closer to a bottom of the dollar than not. And again, if the bottom here, or if the dollar is declining in the form of an ending diagonal, whether this 3, a 4, and a 5 still to go, or however it's kind of out here, if it's an ending diagonal, we should expect a very strong, harsh reversal on it. And when that happens, that causes people to run for the dollar. And if everybody's running for the dollar, it becomes a bit less liquid. On a much bigger scale, that's what happened in March. That's why we had the huge dollar boom back in March. As everything dropped, the dollar shot up because people ran to it, and then they couldn't all get it, so they were willing to pay higher and higher prices for it, which drove the value of it up versus everything else. But there are so many things that make up the value of the dollar that when people just look at the DXY or some other dollar index, and that's all they're looking at to get their reasoning for why the dollar is going to go where they think it's going to go, I think they completely miss it. You should be looking at things like the dollar pairs. How are they doing? How's the dollar doing against the various other countries out there, especially the bigger ones? The ones that hold more importance, like the euro and the yen. Maybe even the Swiss franc. Things like that. Great British pound. Cable. And most people don't do that. They just look over at the dollar index or something and go, oh, look, it's doing that. Well, the problem is you don't have a real understanding of why that dollar index is doing what it is. And so that could cause you a lot of problems. Other than that, you also have the dollar value relative to other countries in terms of interest rates. It's not that that the dollar has to be doing well and everybody else has to be doing bad for it to rise. Everything could be doing bad. The dollar just has to be doing not as bad. And that'll cause the dollar to rise in relation to those other currencies. I mean, there's so many things involved in it when you really look at it. So I would never advise you just to go solely off, an index chart, which is why over there in Discord we're always talking about, that's why we have the daily updates there for tier 2 and tier 3 for the Euro USD, the Aussie dollar against the USD, the yen against the USD, and all that stuff. Kind of to keep a better eye overall on what's going on with the dollar there. But I mean, look at this though. So we had numbers that were less than encouraging, and yet the dollar itself is not tanking. So that says something. So we'll look and see if we can get this fourth wave up. I've just got it right here. It could go up here. It can go right up here toward the pivot. If it breaks above that pivot, then it starts getting interesting, going, okay, do we maybe have 5 down already here and we're looking up? But, my expectation, sorry about this, if we get a bounce off here right now, is that we would just potentially push up here to check this level up here, this 90, it's this cluster of activity here. You see they got this this support area right here coming across here. So right around there, 92.15 or so, up to the pivot. That area is where I would look at to kind of try and get to. If this is a 1, 2, 3, and then that's going to be a 4. Now your 5, again, it just has to have, it's 5 waves down just below, it just has to break below the wave 3 swing low. So while it could come down potentially the S2, all it has to do is come down just below this point right here if it goes up from here. 90.476. It's just kind of come 90.475. If it does 5 waves and hits that 90.475 and turns around heads up, there's your 5th wave. Creates basically a double bottom there. So, until it shows anything otherwise, I mean, there's no reason to think worse off of the dollar than that. Do I ever look at the USD ZAR? I've charted a few times for our tier 3 members. They've requested a few times. Casper, feel free, man. Go to the we've got a specific channel called Chart Requests. Go in that channel and put your request for that. And then I will do the chart and I'll put it in a channel higher up called Requested Charts. So you ask for a chart in Chart Request channel, and then I post that chart in the Requested Charts channel. And then that way everybody in Tier 3 gets to see all the different charts that have been requested and everything going on there. More potential trading opportunities like that. Let's see here. Hey there, Frank. I appreciate you, man. How can you sign up to get different tier status? If you're already in there with me, I'll tell you what, just go ahead and you can ping Adam. You can send a message to Adam Harris, and he'll ask you. You can kind of tell him exactly what you want to know here, or you can send me a message, and I'll talk with you about it as soon as we get done with the stream here. And I'll figure out exactly what you're wanting to do there, where you're at, and whatever, and see the easiest way to do that. Yeah. Let's see here. So anyway, I mean, this is where we're kind of looking here. Now, here's my thing, guys. And this is the thing that'll probably really tick you off. I'm just letting you know right away. Let's look back over here at Bitcoin. Let's look back out here. Oh, we'll go the weekly. Whatever. All right. Here's the thing, guys. The narrative right now is that Bitcoin has started its new bull run. It's going to hit 500,000, 6 million, whatever. These are literal headlines. Barron's, Wall Street Journal, Forbes, all these things, right? Seems kind of excessive, doesn't it? For where we're at. We haven't even got past, barely past the all-time high area. We can't even get beyond it where we're at right now. We're just kind of sitting there. Seems kind of premature to be talking about 500,000, 6 million, right? What if Bitcoin right now is just showing the ultimate in this whole risk on? Again, guys, the put call ratios are just stupid bullish. All these different things I've talked about over the last few months, all these metrics that keep getting broken. Basically, anything from 1929 has been shattered now. We're doing even more so now. So you get all this excessive hope, all this excessive optimism. Asset managers are out of cash in the greatest way that they've ever been. Everybody's into equities. These equities positions are huge, right? So everything basically in the market is all this bullish. ETF inflows this year were absolutely insane, especially coming out the most recent quarter there, right? Everybody's talking about gold skyrocketing $10,000. We're talking Bitcoin, $500,000, $6 million, whatever. Talking about stock market, $50,000 or 50,000 points there for the Dow Jones. This is quite excessive, especially at a time here where we're dealing with a contraction in credit. Let me kind of pull up you guys a few things here real quick, in case you guys aren't following me here on Twitter. We've got this right here. U.S. household debt service. Now remember, we are in a debt-based economy. A debt-based economy means that we need credit to continue to expand in order for it to continue to move. If there is a slowdown or, heaven forbid, a contraction in credit, you are not going to get inflation in the way you're thinking inflation. Now, government's manipulation of the money supply via QE is causing asset inflation, which doesn't do most people any good because most people aren't already holding assets. Remember, the idea of QE is, and where money is produced, it's where does it go first? The people who need it the most, the ones at the bottom of the earnings ladder and whatnot, are the ones that aren't going to benefit from it, but they're going to end up that they're going to have to pay the higher prices for the asset inflation because of that. So what do we have here? We have, since January of 2008, we see the U.S. household debt service here as a percentage of their disposable income is the lowest on record. What this means is since 2008, on average, households have been either not taking out new debt and or paying down their old debt. This is contraction of credit. If you have contraction of credit, you're not going to get inflation. Again, inflation cannot occur. The inflation idea is that money is freely spinning out there in the economy. But as I've talked to you guys about it before, most of that QE money that was printed went into the Fed Reserve. And it's not touched by anybody. It's not circulating. It's there to provide a reserve for banks to encourage them to loan to people who they wouldn't normally loan to because the credit isn't good enough or, they're questionable about their repayment abilities. But banks didn't take the bite. Banks didn't bite. They, instead of lowering their credit standards, they rose. They increased them because the banks don't want to get caught with all this bad debt, which is what would invariably happen most likely. So everybody says, oh, inflation, money printing, this and that. But at the end of the day, it's not making its way out into the, most of it's not making its way out into the, out into circulation. Again, that which is put in the Federal Reserve cannot be touched. It's not entering the supply anywhere. The idea is that it encourages banks to lend out more money. And they aren't doing that. And we know people aren't taking on more debt. Matter of fact, they're paying down their debt. So, what's the Fed to do, right? Let me see here. Again, talking about the view that's going on there. Asset managers boosted their short bets on the U.S. dollar to record levels. Again, the idea being they're shunning the dollar thinking that equities are going to go up forever. It's going to go on. And what I need you guys to try and understand from this is that this creates this, how to explain this? This irrationality, this emotional fuel, this emotional, everything's going to go up. Everything's risk on. We're going to put money into everything. So we cannot deny that Bitcoin is a volatile asset. People are coming out here saying, "Oh, it's a store of value." No, it's not. It's just gone up in value. That's not a store of value. Now, that doesn't mean it can't become a store of value at some point, but it's not right now. And so if it's not a store of value, if all it is a speculative asset, and everybody is just risk on everywhere, jumping away from the dollar, just putting money in everything, that's quite excessive. So what if Bitcoin is your canary in the coal mine? What if the fact that Bitcoin is moving up here like it is right now, what if that's your warning that things are too speculative? That the market is way too offsides for risk on? And in that case, instead of going up to 500,000 or 6 million from here, Bitcoin drops. Because I honestly, again, I've told you, if there's one asset I think that may be able to withstand an overall economic drop, decline, it might be Bitcoin. But my default position is that if everything's going down, Bitcoin's not going to be the savior. Because at the end of the day, Bitcoin is a speculative asset. And you say, "Oh, but Jones and Saylor and all these guys are putting all this money into it. It's definitely going to go up." No. They can be wrong too. And the minute they get wind that they may be wrong, they will be selling. I've gone over this with you guys. People in their position, they're not interested in losing their wealth. They're interested in preserving and or growing it. So if they've got it in something which turns out not to be working in the way they had hoped, they're not going to keep it in there. There are so many things at play right now, guys. So many things that most people don't even understand or even know exist in terms of the financial markets or the economy or whatever. Now, I'm not saying this is going to happen, but I'm saying with everything else going on there, very much so, that this could be the final straw. I say the canary in the coal mine, but basically what I'm trying to say is Bitcoin going up here and everybody being so gosh darn bullish right now where we're at. It is potentially this warning that, hey, it's too much now. Everything's too much. People are not thinking. They're all emotionally bullish. And we all know what happens with that. It comes down. Now, does that happen today, tomorrow? Probably not. Does it happen in 4 weeks, 5 weeks, next year? Maybe. Does it happen 3 months from now? Maybe. It doesn't have to happen tomorrow. We're talking about the grand macro picture, the macro idea of what's going on. But if you guys haven't sensed that there's something different going on in the world today than what there's been, I don't know what else to say to you. But what you can notice is this excessive exuberance, this risk-on attitude that's permeated itself across all markets at the same time. That's not normal. And if something is not acting in the way that it usually does, you should be cautious. Let's see here. Let's see. Ethereum looks like it's making a wave 2 of a larger wave 5 with support of the 450s. So not much probability of Bitcoin to go much further, much lower, right? Oh, Bitcoin can do whatever it wants. At the end of the day, Bitcoin controls the market, not Ethereum. If Bitcoin pukes and rolls over, Ethereum's going to go with it. Yeah, and then you'll look back and go, "Oh, okay, this is what the count should have been. Okay, I'm seeing that." So, I mean, these are things I try to put out there, but most of the time, retail traders in general, they don't take it very happy because, first of all, it destroys their "I'm going to get rich off Bitcoin" thing without doing anything kind of idea. And second, they have no clue about what all these larger macro indications mean, or what they could mean. They don't understand the significance of all this risk on right now at one point. And so it's hard to understand what I'm saying. And so if something doesn't happen tomorrow or today, then they're like, oh, you're so wrong and you're so stupid. And, at the end of the day, I hope to God you guys aren't like that with anybody. I mean, I don't care what people say myself, but I mean, it's just the idea that they're thinking this because they don't understand. And you don't want to be doing that. Again, guys, I'm not here to convince you that it's going to do whatever, that it's going to do what I think it's going to do or what I'm, cautioning that it may do. I'm just here to help you understand why I think the way I do and to help you to understand that there's more to it than the way that most of y'all probably are thinking on a daily basis. Because most of y'all probably don't have, an economics or financial background. And so, again, the idea is just to hopefully give you guys at least, if you're going to laugh and whatever, that's fine. But hopefully you at least take it serious enough to go, okay, but if it does happen, then I need to make sure I'm out at this point because at that point, it's probably going to continue lower. The last thing I want you guys to do is to end up, buying up in this area and holding all the way down to here or here. I don't want you holding it for, $19,000 drop or something like that. Not if you don't have to. If you're an investor and you believe Bitcoin's going to go up to 100,000 or 50,000 or 100,000 in 10 years or whatever, you know what? Honestly, buying right here and holding this drop and whatever, that's not a big deal. But if you're looking to make money right now, the last thing you want to do is buy it up there and have to hold for that longer drop. Again, especially if you'd already bought once up here and held all the way down through here, then held back up, and you still didn't get rid of it, goes back down there, Hey, Corey, how about inverse head and shoulders? Where are you talking about? You have to tell me what time frame you're looking at, where you're looking at, about what date range. Then I can know what can answer you there. Othmane points out that irrationality and FOMO can push price really far before dropping. Sure it can. That's why I said, this isn't anything that has to happen right here. A price could go up to 24, 25,000, maybe even a bit higher before it does. But the problem is that in thinking that right here, we're definitively bullish and we're definitively going up to 100K right now without understanding the possibility that you may be wrong and why. Not just saying you may be wrong just to be contrarian, but understanding that there is a very legitimate possible reversal to this, not just with the Elliott Wave here, but also with the way in which, what I was just talking about there, with these over-exuberance, everybody's risk on everything. And, Bitcoin, I've said this before, it may be the most risk-on asset there is out there right now. So, to not understand that that's going on and what could potentially, that could maybe be seen here, it's like everybody at 2008. When they weren't, when everybody just believed mortgages and everything, everybody could get mortgages and your real estate prices were going to go up forever. And, and then all of a sudden, boom, it hit, right? Same idea here, just with something much more serious, which is the credit bubble. At the end of the day, guys, everything we're looking at here, has to do with the credit bubble. And if the bubble pops, which it may have already done, it may be airing out right now, then all these bullish thoughts you have across everything make no sense at all. Because there's no way that can happen in a debt-based economy in which credit is contracting like that. And the worse it goes off, the more convinced people are going to be to not add more credit, which just contracts even more, which makes the fall even worse. Hey there, Marco. Good to see you. Let me see here. Onyx King says the irony of it is that this is all happening during times when people should be risk off. Yeah, again, people are risk on trying to make money because there's a chance to make money, and you can do it. Again, I've always told you guys you can continue to play the market as it sits daily, but that doesn't, and still have a different view about a larger time frame. Because things take time to play out. Tops and bottoms take time to establish. And so, You can have these greater macroeconomic thoughts that say maybe things are going to go to hell in a handbasket at some point. But on the daily, you can still be trading up and making that money. It's when you become emotionally positive that price is going to continue going up, and it comes back the other way. And you're not prepared for it. That's the problem. Let's see here. Hey there, Marcel. He says, one theory, old all-time high until July 2020 is an ABCD with a very short E. There starts the last wave, 5, maybe 24. Yeah. Something we've talked about for sure. Yeah. So you're looking like A, B, C, D, and E right here. I mean, it's definitely possible. Sure. While it is possible, I'm iffy about there being such large moves here, and then it's so tiny with an E. But I can't say it can't happen there. And so in that case, again, you'd be looking at target here. Well, actually, if we look at that, it'd be right there. If you want to, I don't know. I guess if you want to pull the whole wave A here. Let me see here. I think that's where you get your 25 target, maybe. Yeah, potentially. Yeah. That could potentially be it. So A down, B up, C, D, and E. But again, that's the whole idea of the potential expanded flat as well. Again, because in order to get that triangle, this has to be an ABC. And so, but then this would have to be an ABC right here, and I'm not as keen on that. I'm looking at maybe a 1, 2, and then 1, 2, 3, 4, 5 gives you a 3, 4, and then you have a 5. So 1, 2, 3, 4, 5. So I'm not really keen on this being a 3 here. I'm sure you can finagle it out of there, but I think, especially if you're looking here on the weekly and zooming out a bit, I think it's a pretty clear 5 waves up. This is definitely 3 waves down. So yeah. Yeah, and the volume on C and D is kind of crazy on that as well. Yeah. I mean, as far as it goes, possible, sure, but I think if I had to choose between that triangle idea and a potential expanded flat here, I think I would probably choose the expanded flat just because it's more along what you would expect for that particular pattern versus the triangle being, quite a bit different than what you would expect, especially with that wave E and the volume issue on it. Because your volume should be contracting as you get through a triangle. And your volume here would be expanding. And that's a big thing that I think probably says it's not that triangle. So yeah. Let's see here. Telluride says, I have an over 800 credit and my bank just took my mortgage option off the table. They no longer like my variable income. It reminds me of 2008 for sure. Yeah, exactly. Like I said, these banks around here, they're, not only are they not increasing the availability of loans, with what they normally do, allowing people with worse credit and worse ability to repay getting involved, but they're making it more difficult for people to get a loan. Yeah. Look at that. It's because of your variable income, right? Even though your credit score is up there, you've got all this great history. Yeah. So, yeah. Marcel says an expanded flat is overall more bullish. Well, yeah, for sure. And I think of it in terms of the pullback here being the most bullish thing that could happen because, man, that sets off for a huge run up potentially on that. Sure. So, I mean, yeah, if we're looking at that and we're looking here at the dollar, we'll see what happens. We're still not getting a bounce just yet, but possible tweezer bottoms here. We want to see some advance above, back above the S1 pivot up toward the pivot here. But really overall expectations that this is a 3 right now. This is a 4. We might have a 5 lower. And that could take, weeks to play out. So again, I said maybe, this stuff happens in, 4 weeks or 5 weeks there into January next year. Maybe. Yeah. Um, Brendan says, if you're still working and have disposable income but can't spend it on movies, sporting events, concerts, vacations, etc., you blow it in the market, it seems. Yeah. Got to do something with it, right? Nobody's okay just to hold it. But yeah, QE, again, guys, QE tends to benefit the wealthy. It tends to benefit those who already have assets because I'm not going to go through the whole thing about it again here right now. But I've gone over it before. But, the way in which the money enters the market or enters circulation, and then the way that it inflates, it comes in inflating those assets. So if you're wealthy, you own assets. So if you own assets, you're getting the benefits of that QE. If you're middle class or even further down, you most likely don't have assets. You're working day to day. Middle class, you're probably trying to keep up with the Joneses. If you're what they would consider down toward poor there, you're just trying to survive, right? So you don't get the benefit of those asset appreciation. The asset inflation prices. No, you don't. But the thing is, with those other prices going up, that causes other things to rise in price. And so now, at the lower end, then not only do you get not only do you not get to experience the the asset appreciation, but you also have to pay more now for the things that you need just to get by. Think of things like food and whatnot. Because we all know that's going up, right? And I know sometimes people want to quibble with me about the inflation. When I say inflation, guys, I'm talking about government's inflation, what they talk about. Because that's all they care about. That's what they're watching. And so if the government, if the Fed or the government are going to interact, going to participate in the market in some way or, skew things, they're going to do it because the way they view inflation is doing whatever they think is doing in that. But yeah, no, we've had prices increase in food and everything. Sure. I would definitely agree. I don't think the government does a good job of watching inflation, basically, the way that they kind of view it. Because it leaves a lot of it out there. And like I said, if you're at the lower end or even middle, even in the, if you're in the middle there, you're gonna face a lot more of the you're not gonna really get the benefits, but you're gonna get the bad parts of it. So yeah. Telluride says they saw grocery prices just hit a 50-year high, adjusted. Yeah. But, again, it's not that there's more money circulating. It's not that there's more credit coming out. It's just a product of everything else that's going on. And, all these things, again, especially when we talk about theories of credit and money. By the way, guys, if you're in Discord, make sure you check out the Macro Finance channel. I posted a multiple links yesterday about credit and money and stuff like that to kind of give you a good basis to kind of maybe understand it a little bit more from where it's starting. But there's so much involved in it because everything's so interrelated. But at the end of the day, if credit is not expanding, then a debt-based economy is going to decline, is going to go into decline. And that's where you get your recessions and your depressions and stuff. You cannot have a debt-based economy that doesn't decline, okay, what I'm trying to say here. You can't have a debt-based economy expand if credit's not expanding with it. So just some things to think, to keep in mind there with that. Let's see here. Kind of catch up. Where are we on gold? Let me pull out the oil real quick here. Let me pull out gold. We'll pull out gold. Why not? Let's see here. So there's gold. Gold right now, I'm looking at possibly, a 1-2 here and then a 1-2, 1-2 as working on 3. Now I had this ABC out here. Otherwise, it may be simply ABC right here and done at the 61.8. extension right here. So it may actually be this right here. I was given a bit more lee room before, back when we were down around this area, so 3 or 4 days ago. But this might be it right here. And so if that is, we're going to look for a decline below. What we're looking for is a decline below this area here, this $1,810 or so. If we get below that, that's going to add confidence to this count right here and suggest that we're headed lower. In that case, we'd have this minimum wave 3 target here of 1642.90. And so we'd look at that right there, and that would just be wave 3. That would be just this wave 3 of 3 kind of idea there. So, you know, again, we'd be looking for a larger move down overall. This would really be setting for a large move down. The only thing that gets it here is if we're getting above this swing high here, right up here, this wave 2 up here at 1898. If we're getting above that, then things start looking much more interesting to maybe being a bit more bullish than what it appears. But as long as we're below that, I think, you know, this is kind of what we're looking at. But even if we get above that, you know, it's still, as long as we're below this swing high is really your point up here. This 1966 and 10 cents. It's really if we get above that that you can that I think you can start really feeling much more bullish. This may be being a wave 4, then you have a wave, you know, or a next to the last wave before your final wave up. You know, we're well off that. We've had, you know, significance seems to be in the downside. We've got lower highs, lower lows. So my bias, you know, just based on the structure here, is down still. But again, you still want to watch those. But, you know, start being a little wary if we're getting above that swing high there at 1898. And you can definitely start being a bit more bullish there if we're getting above 1966. For now, if we drop down here below 1810.50 or so, to me that says the top's probably in here. You know, it adds confidence to our account. If we drop here below the swing low at 1767 and 20 cents, that should indicate that we are headed down lower then from there. Oil, what's going on with the oil here? Oops. Oil finally moving up today. I'd been kind of doing this sideways thing here. Got up, hit the supply structure support there, rejected. I think we've still got movement up here toward the EQ at 47.56 or so. Now with this current count, this black count here, that gets us to 3 of 5. One of the things, right now I've got this as a 1-2. But as I've told Discord, I'm not convinced that's it yet. I'm thinking, especially if the dollar reverses, I'm thinking that, you know, at some point here in the next few weeks, I'm thinking this may just be wave 4. So instead of wave 5 being right here, this is just wave 3, this is wave 4, and this basically becomes wave 5 here. And then we would have a stronger move back down. If you've been following me for a bit, you know I was talking about the idea that, if we zoom out here to the daily, that rather that, you know, originally, as we came into this, my count had this as a 3, this is a 4, would be a 4, and then we'd have a 5 lower. So I was already looking for a lower one. Now, what happened was obviously we had that strong decline here. That was that May issue there where people just, the demand for oil just wasn't there. People were getting stuck with contracts. They were paying people as much as what, almost $40, I think it was, a barrel to take it off their hands. Yeah, $40.32. They were paying up to $40.32. So nobody was buying them at these prices down here below zero. Nobody's actually buying them. The people that had those barrels of oil were selling them or not selling them, they were paying people to take them at up to almost $40. But anyway, I don't, even though it's gone down that low, I think we still could have one more event like that, especially right now that that everybody's into this agreement to produce more now. So to increase production, but yet there's still a huge supply. There's still a huge bit of supply out there in the market right now, and production and all that hasn't really picked up significantly enough, I don't think, to warrant some kind of production increase in oil. So, basically what I'm saying is it looks like they're going to be adding more oil onto a system that already has too much oil. And if you do that, I mean, it's hard to have prices rise, when you're doing that. So again, I'm thinking with this, maybe instead of a 5 up here, maybe a 3, this may be a 4, and this may be a 5, and then we'll have a, that might just finish, say, a 3 here, a 4 here, and a 5 down. So just something to kind of keep it, paying attention to. For now, I've still got the 1-2 here, and we'll see if it plays out there. But definitely keep an eye on the rest of that, because there's no reason to get caught if I don't have to, right? The House just passed a bill to legalize marijuana. It only matters if the Senate does it. So we'll see. I wouldn't get too excited until you see what the Senate says. From what I saw with the Senate, they weren't going to pass it. So, yeah. We'll see what happens with it. Legalizing marijuana is likely to make it cheaper. I'm not sure. Cannabis companies may get an initial bounce out of it. Kind of like farms, the bigger, more corporate ones may do well. But a lot of the smaller smaller cannabis companies, I think, would probably just go out of business, be put out of business with it. Yeah. So we'll see. Again, the idea of legalizing cannabis or legalizing marijuana puts a lot of downward price pressure on the illegal way to do it, with the cartels and stuff like that. Because now you have competition, cheaper prices. Yeah. So we'll see what happens with that. It's definitely got to get through on Senate, though. So until that happens, I'd be concerned about that. Wouldn't the 10th Amendment say that marijuana legality is up to the state? I'm not a law guy. Yeah, we think a lot of things say things what they say. The one thing I learned in law school is most of what you might believe that the law actually says, most often is not what it says. There's a lot of gray area, and there's a lot of ways in which you can interpret it. And so it's all based on prior case law. And so it's really difficult once you've got prior case law that says one thing to have them turn it. It's a very difficult thing to ever have happen. It rarely happens in the grand scheme of things. So yeah, even though you read it and go, you know what, I think it says that would be what it does. You come to find out that the courts have cited otherwise because of some novel way of looking at that law. So, yeah. It'll be interesting. I don't smoke, cigarettes or otherwise, but I don't think it needs to be illegal. I think all this stuff that happened as I was growing up during Reagan's day, Nancy Reagan doing the DARE program, say no to drugs and all that. I think that caused the increase that we've seen in the drug use and the power of the cartels and everything, rather than decreased it. So I don't know. Here's the thing, guys. If you plan to do something, if you really want to do something, the law saying you can't is not going to keep you from doing it. So, yeah. Aren't we all, Hank? Good to see you checking in, man. But yeah, I don't think it does any good for society in general to outlaw it. I really don't. I don't think it's anything to be doing, but again, I don't think I should tell other people that they can't do it. Yeah. Yeah. Now the one thing I do I definitely believe in as far as cannabis goes is not is the the ability of it to minimize pain, PTSD, stuff like that. Well, in PTSD treatment with using mushrooms now seems to be a big thing, and acid, stuff like that. And I think there seems to be some really good medical benefits to it. But laws have never been about control. They've always been, guys. People may use words like morality and ethics and stuff like that to promote them, but at the end of the day, laws are about control. And so, yeah. Always good to talk about that, right? Let me see here real quick here. Where are we at with the NASDAQ? Let's pull the NASDAQ up right here. NASDAQ, I've got a possible ending diagonal on here. Maybe. NASDAQ isn't really moving much. It's moving just a little bit on that on the jobs report numbers today here. If this count is to remain correct, price cannot advance above 12,804.78. If it gets above that level, then this is not a ending diagonal right here. So simple to look at, simple to know. So it could potentially continue moving up, almost another 300 points to finish out, potentially to finish out wave 5. But again, if it gets above that green line, it's no bueno. It's not valid anymore, okay? In which case, then we'd be looking at this as a 1-2 here. And then probably this is a 1, 2, 3, 4, 5 is a 3, 4, and 5. So more subdivisions still to go. But nonetheless, still a fifth wave. Still a fifth wave, guys. Let me see here. What do we got here as far as the S&P E-minis go? S&P E-minis working up a bit more off that. Basically up here around this possible wave 5 target ending here. Again, same idea. We've got an ending diagonal here, I believe. Right now, that's what I'm looking at. So 1, 2, 3, 4, 5 here. And so it cannot go above 37.05. As long as price reverses, terminates prior, the advance terminates prior to 37.05 and reverses, heads back down, we're good. If it gets above that level, then this as a ending diagonal is invalidated. So remember, guys, with these ending diagonals, they're ABCs. So ABC is 1, ABC is 2, ABC is 3, ABC is 4, AB working on C here for 5. And then we've got the Dow Jones here, guys. The big one there, the broader based index. And it's marching its way up there little bit by little bit, making its way up here, trying to hit this wave 5 target up here again. Once again, same idea. If it advances above this 30,350 level there, if it gets above that, then that'll invalidate the triangle as it sits here. There we go. So basically you have what amounts to an ABC for 1, ABC for 2. And then you've got an ABC for 3, ABC for 4, AB working on C here for 5. So that's how I'm looking at it there right now. So, it's interesting that all three indexes have that ending diagonal possibility, especially with the dollar. Oh, I don't have that up. I put it back. But the dollar having that ending diagonal in the other direction. So potentially getting a flip on that, which is what we would expect. So yeah, I mean, that's kind of where we're looking there, guys. You can see how all these things are kind of playing out there. Euro didn't move much, with the jobs report. The euro did not advance strongly or anything. As a matter of fact, it just sits real muted right now against the dollar. So be watching it. But anyway, there we go, guys. That'll do it. If you didn't want to learn anything when you're here, I apologize. But hopefully you learned something. And again, guys, I'm not here to convince you that you absolutely have to believe what I'm telling you. as far as, price projections or whatever. They're all immaterial. I am most interested in the larger picture, what's going on there. And so, what you've heard today is a lot, but nowhere near all of it, of my reasons for seeing things happen the way that I think they probably will. But a lot of it comes down to this excessive risk-on appetite right now across all markets. This type of exuberance comes at the end of movements, not at the beginning, guys. So, again, that's just my big warning there. Again, guys, I've been doing this, 25 years now. So I'm just trying to share some of my general market things that I've learned over the years. All right. So hopefully you take that for what it is, and you use it as an opportunity to maybe check it out and, see, kind of just watch things. At least use it to make sure that, okay, if this does happen here, then I know I need to be out over here to protect myself. If you do that, guys, that's all I hope to get out of it, honestly. I don't need you, if you want to believe me, that's great. But I don't do this so that you kind of go around everywhere and like, oh gosh, he's so right. He's so right. I do this because I want you guys to have an honest, well-explained idea of what's going on and why it may not be what you think it is. Doesn't guarantee it's not what you think it is, but there are more than enough reasons to definitely be cautious about it. Okay. So I appreciate you guys. As always, thank you so much for checking in. If you're in Discord, of course, I will see you guys over there. If not, then hopefully I'll see you guys on Monday, 11 a.m. Central Standard Time, all right? Be sure you're following me there on Twitter, of course. Don't forget, through the end of Sunday, that's it. I'm not going to make any exceptions. You can still get the cheapest prices you're going to have on these multi-month discounts for the year there. Like I said, you can get Tier 3 at less than 50% or at more than 50% off if you get the year with the discount in it. So if you're thinking about it, that's the way to do it. Otherwise, we may or may not do it in a year, but we're definitely not doing it before then. Same pricing, all right? Remember, guys, at the end of the day, no matter how good it looks, the only thing you control is how much you lose. So regardless of all this other stuff we talk about, the most important thing you can do as a trader is to continue to work on your risk management. That is where you will make and save the most of your money. All right? You guys have a great day. Have a great weekend. Thank you so much for joining in. We'll catch you next week. Take care.